Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about J&J Snack Foods Corp. Quarterly report. J&J Snack Foods Corp. offers a diverse range of products and services to various industries. At the core of their business are snack foods and beverages that cater to both food service and retail supermarket markets. Their product portfolio includes soft pretzels under several brands such as SUPRPRTZEL, Dippin' Dots, and Ola, among others. In addition to these, they provide frozen novelty products like ice cream and popsicles under the LUIGIS and Minute Maid brands. Churros are also part of their offerings, available under the Ola and California CHURROS labels. The company's bakery products include a wide variety of items such as cookies, breads, rolls, crumbs, muffins, and donuts under several brands like Mrs. Goodcookie and READI Bake. J&J Snack Foods Corp. also offers frozen beverages under the ICEE, Arctic Blast, Slush PUPPIE, and Parrot Ice brands. Furthermore, they provide funnel cakes under the Funnel Cake Factory brand and various other food products. The company sells its products through a network of distributors and sales forces to a broad range of customers including snack bars, restaurants, stadiums, schools, colleges, and independent retailers. In addition to their product offerings, J&J Snack Foods Corp. also provides machines and machine parts to other food and beverage companies. This indicates that the company is not only focused on manufacturing and distributing products, but also offers equipment solutions to its clients. Overall, J&J Snack Foods Corp.'s business encompasses a wide range of snack foods, beverages, bakery products, and equipment services catering to various industries and customer segments. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of J&J Snack Foods Corp. has dropped in the past year due to several factors that have impacted the company's performance and investor confidence. One major reason is the decline in sales revenue, which can be attributed to changes in consumer preferences and market trends. As consumers increasingly opt for healthier snack options, companies like J&J Snack Foods may struggle to adapt and maintain their market share. Another factor contributing to the stock price drop is increased competition from new entrants in the snack food industry. With more companies entering the market, J&J Snack Foods faces intense competition for shelf space and customer loyalty. This heightened competition can lead to decreased sales and revenue, ultimately affecting the company's stock price. Additionally, economic factors such as inflation, interest rates, and global trade policies may also have an impact on J&J Snack Foods Corp.'s stock price. A rise in interest rates can make borrowing more expensive for consumers, leading to reduced demand for snack foods. Similarly, changes in global trade policies can affect the company's supply chain and increase costs. Lastly, poor management decisions or unforeseen events such as recalls, product contamination, or regulatory issues can also cause a stock price drop. If J&J Snack Foods Corp. has faced any of these challenges in the past year, it could have contributed to the decline in its stock price. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified in the company's recent performance. On the growth side, sales to foodservice customers have increased by 10% year-over-year, driven by new product innovations such as ICEE brand frozen carbonated beverage and Slush PUPPIE brand frozen non-carbonated beverage. Additionally, handheld sales in the retail supermarket segment have seen a significant increase of $1.8 million. However, revenue decline has also been observed in certain areas. The food service segment has experienced a 5.2% decrease, primarily within the bakery portfolio. Lower sales volumes and decreases in gallon sales have also contributed to the decline. Furthermore, declines have been noted in the frozen beverages segment, including ICEE, Slush PUPPIE, and Parrot Ice sales. It is worth noting that some factors have had a neutral impact on revenue growth or decline. These include the closure of manufacturing facilities, share repurchase programs, consumer behavior and spending patterns, discretionary income levels, the impact of tariffs on raw material costs, and the ability to pass on cost increases through price increases. Operational improvements, such as Project Apollo, and expansion of growth opportunities across various channels and customers, have also been mentioned as neutral factors. Net income has experienced a decline over the past 2 quarters. In Q4 FY25, it decreased by $24 million, followed by another decrease of $6.1 million in Cone F26. The most recent quarter saw an even sharper drop, with net income decreasing by 82.8% to just $0.9 million. The decline in profit margins can be attributed to several factors. Inflation and fluctuating raw material costs have had a negative impact on the company's bottom line. Additionally, potential tariffs on imports may also be affecting profit margins. However, some segments of the business are experiencing positive changes. The food service segment has seen an increase in profit margins due to efficiencies gained from manufacturing footprint optimization. Unfortunately, no specific reason is given for the decline in profit margins in the retail supermarket segment. The company's debt level has undergone a substantial increase over time, rising from $50 million to a maximum of $275 million. This significant jump in debt is a notable change in the company's financial situation. In contrast to its increasing debt, the company's interest expenses have actually decreased by 34.4% for the 3 months ended December 27, 2025. Specifically, interest expenses dropped from $0.2 million to $0.1 million during this period. Management is optimistic about the company's outlook, citing its position as the largest manufacturer of soft pretzels in the U.S. They expect to benefit from industry recovery and new product innovations, which will be driven by supply chain efficiency improvements. To combat potential headwinds such as macroeconomic trends and inflation, management plans to focus on operational improvements and growth opportunities. One key initiative is Project Apollo, which is expected to generate at least $20 million of run-rate operating income by the end of fiscal 2026. Management also expressed confidence in their ability to fund future growth, stating that they have sufficient cash and borrowing capacity for at least 12 months. Overall, management's strategy appears to be centered on driving operational efficiency and leveraging growth opportunities to navigate potential challenges. Concerns about supply chain disruption are mounting. A fire at the Holly Ridge plant in North Carolina on August 19, 2024, caused significant damage and interrupted operations. Furthermore, multiple plant closures have been reported in key locations such as Holly Ridge, Atlanta, and Colton. Additionally, potential headwinds due to tariffs on imports pose another challenge to the supply chain. These disruptions could lead to inventory buildup and further complications for businesses relying on these facilities. That concludes the financial summary for J&J Snack Foods Corp. Feel free to comment below, and I will be happy to answer them when possible.